Good day everyone, this is your European Open briefing for Monday, September the 19th. I am Rafi Boyadjian, currency analyst at xm.com, and we're going to be looking at what's going on in the currency markets today. It's been a fairly subdued start to the week on Monday as trading remains cautious ahead of the key central bank meetings by the Fed and the Bank of Japan later in the week. We're seeing some modest risk appetite with Asian and European equities opening higher. Fading expectations of the September rate hike by the Fed are supporting market sentiment today. The dollar has eased off from Friday's highs, while the Aussie and the Kiwi have rallied from the weaker dollar as well as higher commodity prices. Crude oil prices have also bounced back today on hopes of a deal between major producers to limit supply. In terms of economic data, it's going to be a fairly quiet calendar day. Now let's have a look at the dollar index. The dollar index is slightly off from Friday's 2.5-week highs. The dollar was boosted on Friday from stronger than expected US inflation data. But we've got some risk aversion today, mainly due to the bombings over the weekend in New Jersey and in New York. Trading is expected to remain cautious ahead of the FOMC meeting on Friday. Now looking at the US inflation data, annual CPI in the US rose by 1.1% in August against forecasts of a 1% rise. Core CPI also strengthened. It moved up to 2.3% in August. This hasn't changed the odds of a September rate hike, which are currently very low, as the Fed is not seen to be raising rates ahead of the US elections in November, as well as some recent soft data, particularly retail sales. So this puts the focus back in December, and looking at the Fed fund futures, they're currently pointing to slightly greater than 50% probability of a December rate hike. Moving on to the Australian dollar, the Aussie is up sharply today. It was boosted early in Asian trading from strong rise in Chinese house prices. House prices in China rose 9.2% year on year in August from 7.9% in July. And this boosted the Aussie, as the Australian dollar is considered as a good liquid proxy for China's economy. Carry trades and a weaker greenback also helped support the Aussie today. The New Zealand dollar was also one of the better performing currencies. The Kiwi was boosted by a rise in the Westpac Consumer Confidence Index for the third quarter. And this also comes on top of the strong GDP data out last week, and this has dampened expectations of another rate hike by the RBNZ. The RBNZ is due to meet on Thursday, where it's expected to hold rates at 2%. Now moving on to crude oil prices. Crude oil is slightly off earlier highs at the European Open today. Prices rose sharply on reports that the Venezuelan president said that a deal between OPEC and non-OPEC producers is nearing. Major oil producers are due to meet at the end of the month, where they're expected to reach an agreement to stabilize the oil market. Also supporting crude oil prices today are reports of further clashes in Libya, which have disrupted oil shipments out of the country. Now let's have a look at the pound. The pound has seen a bit of a rebound from Friday's 1-month lows against the dollar, but we're still seeing some downside pressure on sterling. Sentiment for the British currency is likely to remain negative due to last week's dovish statements out of the Bank of England at its September policy meeting. We've also had some reports that British Prime Minister Theresa May may trigger Article 50 sometime in January or February. And the uncertainty surrounding the timing of Article 50, when it will be triggered, is keeping downside pressure on the pound. And of course, Article 50 would be the formal initiation of Britain's exit from the European Union, so this will likely weigh on the pound for some time yet. Now looking at today's economic calendar, we've got some Eurozone current account figures coming up. We also have the latest dairy auction later in the day, as well as the NAHB housing market data out of the US, but apart from that, it's going to be a fairly quiet day, so the focus will likely remain on the Fed and the Bank of Japan policy meetings on Thursday. The Fed is not expected to raise rates in September, but we do have growing expectations that the Bank of Japan will ease monetary policy in some form, most likely by cutting its negative rates deeper into negative territory. That's it from me today. Hope you can join me tomorrow. Thank you very much for watching and have a great day.